There are many scenarios in which a beneficiary might seek out a private loan. One such example is paying off a reverse mortgage. HCS Equity provides private real estate loans to trusts and estates throughout California, and we specialize in reverse mortgage payoff loans. In some cases, reverse mortgages are taken out unbeknownst to the rest of the family to provide sufficient cash to live while limiting monthly expenses such as a mortgage payment. When that loved one passes, however, those loans become due immediately. There is a 6-month grace period for repayment, but if the loan is not repaid within that grace period, the lender has the right to foreclose. Here are some ways a reverse mortgage payoff loan can help beneficiaries in need. A family required to pay back the late homeowner's reverse mortgage might feel the pressure of a constricting timeline and consider a reverse mortgage payoff loan as a solution. The initial process of administering and distributing trust assets to beneficiaries takes time, which eats up a valuable portion of the 6-month grace period. A reverse mortgage payoff loan allows the beneficiaries to pay the lender within the allotted time period. Another situation a family could be experiencing is that the estate is going through the probate process and is waiting on the courts. This time counts against the 6-month grace period. Maintenance and renovation also pop up as common issues for beneficiaries. Repairs and renovations take time, and so does prepping a house for sale, especially if one is trying to get the best value. Once a house is listed, there is no guarantee it will sell fast enough to meet the 6-month timeline. Getting more time in life is a rarity, but at HCS Equity, we provide beneficiaries both time and flexibility with reverse mortgage payoff loans. In addition to the estate avoiding immediate foreclosure after the 6-month grace period ends, reverse mortgage payoff loans allow the executor to manage estate assets without having to sell them to meet expenses. To qualify for a reverse mortgage payoff loan, the loan must make sense for all parties, and there must be sufficient equity in the property. Typically, this means a loan-to-value ratio less than 65%. There are several key benefits to working with HCS Equity on your reverse mortgage payoff loan, such as competitive rates and terms so you get the best rate possible, no personal guarantees, interest-only payments so beneficiaries have maximum flexibility, no prepayment penalties, and no minimum months of interest. Plus, funds are typically available in 7 to 10 business days. HCS Equity has more than 2 decades of experience, and we understand that each estate has a particular set of needs. Contact us today to learn if you or a family member can qualify for HCS Equity's reverse mortgage payoff loan.